Hey everyone, I hope you guys are doing well. I wanted to bring you a video on 12 things, if you write them on a credit application, can get you denied for credit. Now, if you're new to my channel is designed to help you no matter where you are in your credit journey. So if you like that kind of information, make sure you subscribe to this channel and give this video a thumbs up. Also, hit your notification bell so you can be notified anytime I upload a new video. With my new Elite Credit System, the AI software will import your credit reports and create you customized disputes according to your credit. The system will show you your positive accounts and you can sort your negative accounts. The AI software will find errors in your reporting with your negative accounts and create custom dispute letters. Then you can personally select every negative account you would like to dispute. The AI system will find errors in the negative reporting item and create you a custom dispute reason. You would just simply accept this reason and the AI system will generate you a dispute letter. You will receive exclusive coaching videos in this system and a private Facebook group where I will be doing live credit coaching. If you'd like to sign up, the link is in the description of the video and in the pinned comment section. At my website, I give you a free hard inquiry removal package because hard inquiries can get you denied for credit. Now, I have other packages for purchase, so you can always access that information in the description of this video for that link or in the pinned comment section. So let's jump into this information. Now, the 12 things that if you write them down on a credit application can get you denied for credit. Number one is wrong or inconsistent information. A lot of you people that have aliases and incorrect names and information on your credit report is coming from your credit applications. So you want to make sure that you're double checking your application, because if you're misspelling your name or certain job information or inconsistent income that you're putting down on your applications, this can get you denied for credit because most of your applications for credit now is automated. So any information that's inconsistent and don't line up, it can automatically trigger a denial, and there's not a lot of eyes on this stuff anymore because of modern technology. So you want to make sure your information is consistent. Now, the second thing that can get you denied for credit if you write it down on your credit application is low income or extremely high income. Now, the reason why low income will definitely get you denied if you have a lot of debt. A lot of times when they're considering you for credit, they're going to look at your debt to income. So how much debt is reporting on your credit report versus your income. So you want to make sure that your debt does not exceed your income. Now, on the flip side, really high income, if you cannot prove it, do not put that on there because it can trigger for them to deny you or request proof. Okay, you want to try to get most of your approvals automatically through a system approval instead of having eyes on if you don't need to, because if they don't ask, you don't want to tell, because if you say the wrong things, it can get you denied for credit. So if you get a denial because of high income or a review, they're saying they're reviewing and they want more information, this can open up eyes into your income and you have to provide proofs. So if you are stating high income, make sure you can prove that information out if they ask you for that proof. Now, the third thing when you're writing on your credit application that can get you denied if you're not properly adding all up your types of income correctly, like household income or annual income. Now, the reason why this is different than what I just mentioned, because a lot of people don't really read that income bracket where it says either household, annual income. If you read each application guidelines, you could be shortchanging yourself. Like household income can include a spouse or a partner or even parents. If you're under the age of 21 or even over 21, a lot of applications will say in those instances you can account your parent income on that application. So you want to make sure you're reading that portion deeply to add up all your income, because like I said, if you don't have that properly, you can trigger a denial if you have higher debt than your income. So make sure you're reading that thoroughly and find out all the options. And if you're a person doing gig work, you can add that into that. You can project what you've been producing with Lyft, Uber Eats for that whole year on your average that you're making thus far. So you can add that on and in if you have other source of incomes that you're even doing gig work. Now, the fourth thing is putting unemployment on a credit application can get you denied, or seasonal layoffs, which is in the category of unemployment. So if you're a bus driver and you get laid off in the summertime seasonally, don't add that because you're currently employed. So you're expecting to go back to work, but you don't want to let them think that you're going to be unemployed. Or if you're a person that's slated for a layoff for your job, if you're currently still working, don't put that down, because if they're not asking, do not tell that. Okay, I almost had that happen to blow a deal with one of my homes I purchased because they found out my employer on my mortgage application. It was national news because I work for Ford Motor Company and I was trying to buy a home. And when they found out that they were slated with layoffs, that mortgage company tried to shut down my deal. Okay, so make sure you guys don't tell them. Unlike me, it was national news. Don't tell them if there are expected layoffs out your job. If you're currently employed, put that down and don't share that information if they're not asking for that information. Now, number 5 is self-employment. Now, a lot of times putting that down, a lot of banks don't like self-employment. It just is what it is. They don't want you taking risks with their money. So they don't like the term self-employment, or it can reduce your lines of credit that you do qualify for. So a good way, if you have a business, and depending on that structure, you can say that you work for that business, okay? Not that you own that business, depending on the structure, like a C corporation or other types of business structures. That's your best way of going at that, because they don't want you risking their money, and they think that you might not be employed coming in the near future. So that self-employment, if you write that down, it can get you denied for credit. 6, if you write down you're going to retire, or retirement can get you denied for credit. Now, I'll give you this example, like I used with the home example. If you're a person that know you're going to retire in the next 2 years, but you're trying to go for a home loan, or you might be retiring in the next 6 months. If you let that mortgage company know, hey, I might not be, making the same amount of income I am currently because I'm retiring, what do you think the underwriter is going to think about that? They're not going to like that, okay? Because then, especially like the home loans, hey, you're not going to be employed. So your income dramatically and most of the times reduce when on a fixed income. So you don't want that. Okay. So if you put retirement, they're going to think fixed income and income being reduced. So you cannot afford this loan, home loan, credit card, or they might reduce the amount you could have qualified without sharing that information. I'm looking to retire, in the next 6 months. So go with what you currently are. If you are retired, it is what it is. But if you're retired and you're doing a little gig work, that can be an option to increase or say, hey, I do this instead. Or if you have a business in retirement, you're not retired, I'm working for this corporation. That's another way of seeing that. So retirement can get you denied. The next thing that you can be denied for credit, if you write it down on an application, is short employment time, or you keep changing jobs. That makes it look like you are not a stable person. So if you just started a job and you only been on a job for less than a month, you might get denied. Okay. So sometimes, with that, like I said, those other gig works, or if you have a business, that might be a better option, or leaving the past employment on until this employment mature might be your best option. But if you look like you got short job or work history and it's not consistent. Now, if it's a smooth transition from one position to another, you can go ahead and account that. Sometimes a continuous employment, they will take that into consideration, like with some home loans. But if you tell them, oh, I ain't have a job for a month and I just, got employed again, nah, that can get you denied. So make sure you keep that in the back of your mind on how you need to position that on your credit application. Now, another thing that can get you denied for credit, writing it on a credit application, is a risky business if you're going for business lines of credit or loans. So if you have a risky industry like a general contractor, a lot of banks don't like that. After the real estate bust, they don't like contracting. It depends. You might have to find banks that deal with that, or cannabis, or truck driving can be another risque. Anything with financial like services or investments, they don't like that a lot of times because they don't want you to take that money and do risky things. The banks want to get their money back. So putting things like that on your application can get you denied for credit if you have a risky business industry. Now, the next thing that can get you denied for credit is if you have a business and you're going for business credit or business loans, is short time in that business being open. So short experience, or you just started that business. If it's less than 6 months or 3 months, a lot of people don't want to lend, or banks don't want to lend to that type of business. So you need to be looking for lenders that will deal with that short business history. Now, one of the ways that you can add to, if you, let's say, is a plumber and you've had your plumber's license and you have experience and you've been doing that, but you just started a new LLC or you just started a new corporation, you in some cases can add on the times you already been doing that trade. So things like that, if you can grandfather in some of your experience or time, but sometimes they will not take that in consideration if you're going in that business name, depending on your business structure, like a sole proprietorship that can work, or independent contractors that can work. But keep that in mind. Short time in business can get you denied if you put that on your credit application. Now, the next thing that can get you denied on credit applications, if you write it down, is experiencing economic issues. So if you are saying, hey, I have an economic issue, like I had a fire, or I actually have some health problems, and a lot of people tell me, like, I'm on SSI or this and that does not look favorable, because then they're looking at if you have health issues or a chronic, or maybe even something that could be terminal, like cancer. You don't want to mention that to underwriting or the bank, because they want to get paid back. So if you're saying, hey, I need this loan because my house caught on fire, ooh, that looks risky. They don't want to do that. If you don't know, banks don't necessarily want to give you money because you need it. They want to make sure you're financially stable to pay them back. So if you start saying things like that, it might be a no-go, okay? Or I had a car accident and I got to fix my car. My car broke down and I ain't got the money. You sound like you're not financially stable. So having economic issues, health issues, they're going to want to stay away from you. So you want to tailor your response, maybe saying, hey, I do have credit cards with balances and I'm looking for a lower interest rate, or things like that. A lot of people are looking to save money, but it's not a red flag that I am financially, not stable, or I'm making improvements, home improvements to my home. That sounds like you're in a happy place. I got extra income, or I'm just trying to use the loan, to improve my home. People don't do home improvements a lot of time if they're not financially stable. So you don't want to let on any economic issues going on with yourself. Now, another thing you don't want to write down on an application is that I've been turned down for credit, so I'm coming to you guys. Don't let them know that you've been searching or you've been turned down, because it's going to make it look like you have some issues that other banks want to stay away. This is why hard inquiries can get you denied for credit, because it ties to economic issues or something is wrong why banks don't want to lend to you. So think about that. It's just like, in the dating pool. If nobody want to date that guy or that female, you're going to like, I don't know if I want to date that person neither. What's wrong with them? Same thing with the banks. So you want to look like people want you, so you don't want to put down there, oh, I'm applying for this loan because, this other bank turned me down, or I can't find a loan. That is not good. They want to make sure they're going to be repaid. So make sure, even with underwriters, if you're talking on the phone with these people, you don't mention that. Now, the last thing on my list that you don't want to write down on a credit application is that you are looking to borrow money or this for burial expenses. That might look like that you don't have the economic finance for a hardship. That's going to be an indicator. Okay. So if you're going for a loan or a credit card and they ask you why you need that, well, I need to, bury someone, that looks like you're in a economic hardship for sure, and you don't have the money to pay for that. Or if that is your spouse, you just lost income. So if you do need a loan for that, do not make that be your reason. You can say, hey, I'm trying. And if you have some credit card, debt, hey, it's not lying, because you can put that money to your credit card. Hey, I'm trying to reduce, my credit card debt or something like that. But if you need it for burial expenses, you do not want to put that down, because that looked like you might have lost a spouse, so that reduced your income, or you're in a place where you cannot afford an emergency. So like I said, banks want to get paid back. So anything that smells like they're not going to get paid back, they don't want to lend to you. So hopefully this information was helpful to you. If you have questions or comments, you can drop it down in the comment section, or you can go to my website where all your questions go directly to my cell phone. And I hope to see you guys in the next video. Stay tuned.